In the past 6 months, Uber stock is down around 11%. And this happened despite the company growing its revenues at around 20% and the net income by 11 times. So what is going on with Uber stock, and is this a potential investment opportunity? In this video, you will find out. One thing I really like about Uber stock in particular is that the company has phenomenal revenue growth. So as you can see right now, I'm looking at the income statement and this is the revenue growth of the company. Now it has slowed down a little bit within the last year, but you can see from previous years it was amazing. But what is better and what I like more than high growth is high growth that is profitable. And so as you can see, in the past the company was not profitable, which is why a lot of people, they decided to sell the stock. But now the company is profitable, and not only profitable but also growing the profit at a pretty high rate, as I mentioned before. So this is something that is very exciting for Uber shareholders. But one of the concerns about Uber stock is what's going to happen when self-driving taxis or self-driving robot cars become available. And more specifically, what if Tesla does it? Because the company has mentioned before that once it develops this technology, it wants to integrate it into its fleet of vehicles and then essentially build the platform themselves where people can access these self-driving cars to go around the cities or whatever they want to go. So therefore they would cut Uber and Lyft and all these different platforms out of the picture and take all the profits. I think this is a fair concern. However, one of the things to keep in mind is that Tesla right now is not the leader when it comes to building self-driving vehicles. The very best right now is Waymo, because they're at the most cutting edge and they actually have a service that is fully automated. And the great thing about this is that Uber actually partnered with Waymo, and here they even expanded this partnership to be able to serve this service in Austin and Atlanta, and I'm sure it's going to be rolled out to more and more cities. So this is the approach to self-driving that is actually working. However, we cannot discount Tesla because they can be very innovative, release this service. But even if they do this, it's going to take years and years of regulation for them to be able to obtain the permits and everything that they need to operate this service all over the world. That by the time that happens, other services like Waymo and other different competitors will partner with Uber or Lyft, because they already have the dominant platform that people know and that people trust and that it actually works well. So in that case, I'm not really concerned about this particular possibility. The other thing I really like about Uber stock is the CEO, which I've seen many interviews of him and I've actually studied quite a bit of his history, and he's very smart. He really transformed the culture at Uber, which was pretty toxic in the past, but luckily now is being restored, and this is really showing in the financial performance. And the other thing that I really like about him is that he's not just one of those leaders that just pretends or just says different things. You can actually see the results behind his actions. And one of the cases where you can see it the most is for Expedia, where he was the CEO. He was the CEO of the company from 2005 and he exited in 2017. So as you can see on the recording, he absolutely crushed the performance of this particular company, and so far he's done really well with Uber, and I have no doubt that this performance is likely to continue into the future for Uber. But one of the things that is concerning about Uber is the fact that Uber driver pay has gone down over time. And while you think this is good from a shareholder perspective, which of course it is because it means more profits, this is not necessarily good, because if the company wants to build a sustainable business model, drivers are a key part of that. That is, of course, until self-driving technology matures and then becomes widely available for everybody. So this is something that the company and the leadership really has to pay attention to, because if there's no drivers, then the network value becomes less and less. However, I don't think it's too much of a concern because they can always increase the pay pretty easily for the platform. But as you can see, there's been some analysis that have been done by third parties. You can see this one right here. But also there's been so many complaints on the subreddit for Uber drivers, which is not a good sign, because this will likely likely dissuade a lot of different drivers that would decide to start this as a way to earn some extra income from actually beginning their Uber driving journey. Something that's very promising for the company is that the market is likely to experience a lot of growth. So as you can see, according to this report, there's an expected 15.7% CAGR when it comes to the ride-hailing market. And this is not only including all the other services that Uber is now offering. So by going to their website, obviously you can see the traditional ride service. Now there's a renting service, which I think is pretty cool and can help a lot of different travelers out there looking for the service. We have a courier service that makes smaller shops and e-commerce stores more competitive with the likes of Amazon and whatnot. And this, by the way, has seen quite a bit of growth in terms of the financials. And then of course we have the grocery and the food delivery service that is becoming more and more common amongst young people. And if this continues, this is going to add a lot of value to the company. But more importantly than this, what's very powerful is the fact that all of these different services can be scaled not only across the major North American markets, but they can also, and they're actually doing really well in third world countries and other international markets. For example, Latin America, in India, in Asia, you see all these different services being used and more common as more and more people rely on them. Now let's talk about the most important part, which is the numbers analysis to see if this is a good investment opportunity or if this is something that we should pass on. So what I did is I analyzed Uber and I looked at all of these different metrics using the Y-Sheets add-on, which you can get on Excel and Google Sheets that allows you to get all kinds of financials and data. But with that, I looked at all these different metrics. I decided not to use the P/E ratio for this valuation, but instead to use the price to sales ratio because it's the one that is the most common and more steady over time. So as you can see the different ranges right here, right now the company is trading around 3 price to sales ratio, but you can see in the past how this has changed. And then we can also observe this again with the help of Y-Sheets on a quarterly basis, so we can see the different ranges and how they've changed over time. In my particular assumption, I would imagine that the company is going to have a price to sales ratio of around 2.7 in my particular valuation. I'm going to show you a little bit more of that later. But what I also wanted to do is to compare the company right here with a whole bunch of similar competitors. In this case, the main one being Lyft. However, the benefit of looking at Uber is that it has the majority of the market, which I believe they hold about 72% of the market, which is amazing. And it is a duopoly. So that is amazing because they do have a lot of pricing power. But anyways, back to the numbers, we can see the different comparison of the P/E ratio, price to sales ratio. Lyft, you can see, has a low number, but they're also not profitable, so this makes sense. But as you can see, the price to growth and the payback period are actually not bad for the company, especially one that is growing this fast. So if we go now to the actual valuation that I performed, you can see that I expect a revenue growth of around 16%. This is based on the market report, my research, historical growth rates, as well as some analyst estimates that I looked at. And then the terminal price to sales ratio is at 2.70. This is again based on historical data, based on analysis of companies of similar size with similar growth rates. So I think these numbers are pretty reasonable. So we have the current revenue right here, we have the expectations, and with a 12% discount rate, which I think is pretty reasonable now that interest rates are starting to come down more and more and likely to continue in the future. This gives us a present value per share of $64 per share roughly, and right now the stock is trading around $61 per share. So I do think this can actually be a great investment opportunity for you to take a look at, do your own research, and yeah, I think it can work really well. The only thing that I would say is pay close attention to what is happening in terms of the technology for self-driving cars, because that could compromise this thesis. But if it is not a negative outcome for Uber, where maybe like the technology does happen, but it happens through Waymo and the company already has the partnership and approvals and all these different things that are likely to continue the dominance of the company in the marketplace, then this could even play out better than we anticipated. And I think just with the growth, good management that the company has, they're also going to be doing some share buybacks. I think this has the potential to be a really good company. And then of course we saw what happened to Expedia in the past. So this is just my personal opinion. Of course, do your own research and let me know in the comments what you're doing about this particular stock. If you've enjoyed this video, make sure to subscribe to the channel and let me know what you're gonna do about Uber stock in the comments below, and I'll see you in the next one.